Good morning, traders. Hope you're all well this morning. My name is Nishal Patel, and I'm going to be giving you your Phoenix Blue morning update for Thursday, the 19th of January, 2017. I hope you're all well on this fine sunny morning here in London. I hope the weather is just as good elsewhere. First things first, just having a look at the news announcements. I think that's key. We have had data out from the Australian dollar, which we will have a brief look at in just a moment. Employment change and unemployment rate. Employment change is up a little, which is obviously positive for the Australian dollar. Unemployment again is slightly off of what was predicted, not favorable on the Australian dollar, so almost equaling each other up, but obviously an increase in employment is always a good thing. So what we've seen is a slight reaction on the Australian dollar in regards to that. We do have some key data out today, especially from the ECB. We've got the minimum bid rate coming out just after midday GMT. Excuse me. We've got some data out on the Canadian dollar, but most importantly, we've got that fortnightly announcement out on the USD, on the greenback, with unemployment claims coming out, with our also weekly data coming out on crude oil inventories, which I'm sure many people will be looking for. There's one piece of news that isn't there. It's just a speech that's going out from Theresa May. Obviously, that being very important, or the Brexit debate being very important to not only cable but also the momentum of the USD, and we've seen that stagger over the last few days for those people that have been watching it. And that's what we're going to turn to next. We're going to turn our eyes straight to the charts, and the first chart we're going to have a look at right now is we're actually going to have a look at WTI, as we were just talking about crude inventories. Having a look at this daily time frame right now, just looking at exactly where price action is on this daily time frame, resting just above that 52 level, staying close to that 52.50 area. And for those people that were trading yesterday, they would have seen that this chart was stayed close to that 52 area for much of the day, and no doubt you can go back on an hourly time frame and view that. It's just staying above that 52 zone. There is some impetus of there are most certainly buyers in the market. There are orders being placed. Many of those orders being below that 52 region. From what I've seen, there aren't many. There aren't huge amounts of sell orders in place. So this most certainly is looking bullish, but remember, this is going off the back of a lot of other data coming out and being released, and most importantly, what's coming up on Friday, or tomorrow I should say, with the inauguration of Donald Trump. Let's not also forget that it is earnings season for the stock market, so we've got a lot of data coming out in regards to companies and their the details of their profits or loss. And obviously that's going to have a knock-on effect onto the stock markets, and in turn will have a knock-on effect onto other markets, in particularly those of the commodities, this in particular. So keep your eyes open for this. Having a quick look at the USD, and in fact, just before we look at that, let's have a look at the price of cable. Cable's just rebuffing off that 123. The high, I should say the low 123s, still above 1.23, floating at 1.2318 right now. Stuck on that weekly 23.6 fib, literally coming off on the highs. And let's have a look at these lows that were formed, and finally we saw some momentum, or the buyers of the greenback and the US dollar coming into play, as we saw after we saw Yellen speak last night. We saw Theresa May speak the day before, and the market's very buoyant, especially with a firm with the firm speech she gave in regards to the how resilient Britain is as a country, and the infrastructure and economy that's in place. Obviously, that gave a lot of momentum onto sterling. We had Yellen coming yesterday, obviously talking about various stimulus that may come along in the upcoming year, and I think that's what most traders were looking for. We're looking for signs on how many potential rate hikes may we see this coming year are off the back of the rate hike in December. Not too much was given away as normal. She was quite dovish rather than hawkish, but nonetheless, it did add to the strength of the USD. One thing that was given away was obviously rate hikes would be dependent on data, US data coming out in the future. So that's not this is probably not a strong note to finish on, but nonetheless, we did see the first time in as many as 5.5 days of continued buying of the USD, and we saw cable come down and hit this low of 1.2250. Which was quite important. Probably looking, and from what I've seen, there are many sell orders at around the 1.23 or 1.23 zone. We probably will see a knock on onto that. And if we flick over to some of our other majors right now, looking at the yen right now, this is a 4-hourly time frame. We can see it high testing off those cluster of moving averages, and particularly this 200 moving average, and kind of rebounding off that. Just flicking over to the daily time frame right now. As we see here, we saw that dollar strength for the first time in many days, and that has driven the yen north of 114, straight to 114 right now, floating at 114.62. Again, with the yen, from what we've seen it's most certainly more bearish, and that it seems as if there are a lot more sell orders than there are buys right now. So there is an imbalance of those the bids and the asks. So probably expecting this to fall down a little more. I am looking for the turn rather than trading this short, and looking for that strength in the USD personally. But remember, I think it's going to be quite jumpy until we get the inauguration out of the way tomorrow, and seeing a setup of various policies and how the markets actually react to a combination of the policies of the new president coming in stateside, and also how the Fed deals with it. I think that's really key, more than anything else. So that is the yen. Looking at the euro right now, euro has taken a nosedive as well, as well as yen. We saw a small amount. We saw a certain amount of weakness in the USD first thing this morning in the European session. That's bounding back by the looks of this. Having a look at this hourly chart right now, just flick over to a slightly larger time frame just so you can see a little more perspective. As we see, euro is still tumbling, has pulled back somewhat for the best part of this year. Looks like it's at a very key area, and saying that, I think all of our charts are pretty much stuck at very key areas, waiting for clear direction, and most certainly looking for a clear choice. I think for many of us traders that are sat at home or sat in the offices trading, I think for safety I would do the same, and wait for some clear direction rather than trying to preempt, because you're just going to get your hands burnt, especially for those newbies out there. I've been in a few positions, if I'm honest, and I'm holding a small position on the euro right now. That hasn't done too badly for me. I'm at break even on that particular trade, and I'm just going to let that run. If it does close me off, then I will be able to take another one afterwards. No losses guaranteed, so I'm okay there. Flicking over to our final chart for today, just having a quick look at gold and seeing where gold's at. Obviously reacting off the USD right now. Since we got some strength in the USD, we saw the price of gold fall a little. Obviously with the sell-off on the USD, we've seen a rise in prices, denoted by this clear bullish movement here over the course of December and much of this year, coming up, clipping my or just missing my 100 daily moving average here, off a high, looking at this high at 12.1898, so 12.19 effectively. Looking quite stable and may actually be trapped within this range. I'm forecasting a fall for the price of gold, but it's just a matter of timing right now. So, okay, guys, best of luck for today and enjoy the rest of your week. Side of caution is essential for this week, most certainly. Until next time, happy trading. Goodbye.